All right, everyone, welcome back to our weekly Zoom video topics. And today we're going to talk about the massive equity growth of the U.S. home owners. My name is Seewing Yee from the Yee Listed Network. Once again, my co-host is Julie Threats.
Seewing, thank you for having me.
Without further ado, let's deep dive into this. All right, so the headline by Refuge a few days ago, the headline is the U.S. housing market gained 2 trillion.
Trillion.
T, not with a B, trillion. I love counts.
Still trying to get to the billion.
It's unfathomable that the equity gained by those people over the years that pulled the trigger, those individuals that are achieving the American dream and they invest for the long haul. So my takeaway is whether they are buying a home to live as a primary home or they buy investment home, if you take action, if you invest for the long term, you are achieving the American dream.
Yes.
And equity and wealth will grow beyond generations. Am I right or wrong?
You're absolutely right. I'm just looking at the little graph down there and just amazing the growth that's taken place. It goes back 20-some years, 23 years, and it's really spiked in the last few years. COVID didn't shut down everything.
On the contrary, that's why it's so important
Mhm.
to get in the game, right? Get in
Absolutely.
the game instead of
Mhm.
sitting on sidelines forever. So my yellow highlights, well, let me pick off the article with the yellow highlights. The total value of U.S. homes jumped 5%, the biggest gain in nearly a year as the shortage of houses for sale prop up values. Shortage of homes for sale, something we all should have learned as Americans. What this just tell me is economics 101. When there's a shortage of homes and there's a pent-up demand, as we had and we still have right now, the year 2024, home prices will grow.
Right.
That you cannot dispute that. And yet, all over the US, you have so many negative people out there trying to counter this. It's a shame for those individuals who does not accept this factual information and keep thinking there's a housing crash, there's a housing crash, there's a housing crash. Think so you can stay on the sideline forever.
It's just interesting because I know the interest rates have crept up a little bit. They've been up and down, but people are just always waiting to time the market. And they're always so consumed with the interest rate. But over time, the interest rate is really irrelevant. It's really time in the market, not trying to time the market, as you always say. And this article, which was written yesterday, proves that. Just get it in.
Yeah, we want to talk about this in many other videos that we have done over the past couple of years. Okay, let's go on. The U.S. housing market gained 2.4 million over the last year, bringing the total value to $47.5 trillion.
Wow.
You look at the 23-year chart right here, the total worth of U.S. real estate, mind-boggling. Back in the year 2000, at the beginning of the turn of this century, were only a total of $10 trillion in housing network. And you go back from the year 2000 to 2010, then the 2008, the housing crash, we all know that. There's a slight dip. See?
Slight.
Yeah, slight dip from 23 trillion back to 19 or 20 trillion. Yes, the 2008 to 2011 housing crash have hurt a lot of people, but there's a one-time event. But ever since the housing crash of 2008, the housing value continued to consistently skyrocket from 2010, 2020, and look at the 2021 and 2022. A massive skyrocket.
Massive growth.
During the pandemic, back all the way up to 2022, then there's a slight dip in 2022, second quarter and third quarter and fourth quarter 2022, when the mortgage rate went up from 3% to all the way to 8%, whatever. You had a slight dip in homeowners equity. And then, of course, this past year and moving forward, the equity continued to go up, which is amazing. From $10 trillion 23 years ago to $47 trillion. We're talking quadrupling growth in homeowners' equity.
That's unbelievable. And I'm sure, I know you've had property for a long time. I'm sure many people in your network have, and they've been able to experience that growth over the long term, even though there was a slight dip. But I guess want to remind your audience, the dip only matters if you're planning to sell the property. If
Exactly.
you're holding it on long term, like what my husband and I, our strategy is, this is how we're going to retire. We don't care if the market goes up or down because the rent doesn't change. In fact, the rent will most likely go up. So I think that people get very nervous to make a decision if they see the numbers going down or the value of the home is going down. But it's like, but eventually, as you can see by that chart, it's going to go up.
Exactly. That's a historical truth. This historical truth, and you cannot dispute that. Okay, let's go on. Housing demand is sluggish due to elevated mortgage rates and affordability challenges. Yet, home values kept rising. The main reason are, once again, there are virtually no homes for sale,
Right.
and although there are new construction homes are being built, the new constructions are not building nearly enough to help with the lack of supply of inventory.
You're right.
Furthermore, home values skyrocketed during the pandemic, and now the supply shortage is preventing those values from falling. Says Griffin Economics Research Lead Chen Zhao. He go on to say the combination of elevated mortgage rates, high home prices, and a limited pool of homes for sale means home ownership is about as unaffordable as ever. Now, when I read this sentence, these key words, home ownership is about as unaffordable as ever. What's my take as a real estate investor? I know you can anticipate what I'm going to say. Home ownership is unaffordable as ever in history. A 40-year low of affordability. What this means is people are entering the rental pool. Consequently, you and I, if whoever wish to get in to become a real estate investor and participate in buying cash flow markets in a good markets, cash flow homes, the landlord can benefit from the massive renters nation. What are your thoughts?
I agree 100%. The landlord really wins in any market. And you, so you've put before, you have areas that you are working with and you are directing us as investors to that are high cash flowing markets, like where we bought in upstate New York. The value goes up, the value goes down. We don't really care because the rent stays the same or it'll go up eventually.
Yes.
But it's a great cash flowing market. We were able to get in at a fairly decent interest rate. Although I think if the interest rates had been, we got some that were below 7, we got some that are right at 7, but it's still, there's so many different benefits other than just worrying about the interest rate. Yeah, I agree with you 100%.
Absolutely true. Okay, let's continue. All right. So therefore, not only there's plenty of renters for landlords like us, investors, the rent is, I believe, about to go even higher than we originally anticipated as we move into 2024.
Right.
Yeah, let's go on. The average U.S. home was valued at almost $500,000, which is crazy. Before the pandemic, the average is probably in the mid 300 or 300,000, 350,000.
Yeah, that's an incredible.
Yeah, this pandemic has caused home to skyrocket. And who would have believed? A lot of people thought when the pandemic occurred that we're going to have a housing crash. Instead, the opposite happened. Not only there was no housing crash, we have housing boom in many markets. And a handful of our investors from my network purchased in the South and Southeast through our network. And their rental property they purchased 2 or 3, 4 years ago have skyrocketed 30, 40, 50, 60%.
Yeah, I just remember about a year ago, in fact, you showed me an article where in the upstate New York, the Buffalo area, people were standing in line to make offers like to view houses, to view property, and to make offers. Yeah, and that was shortly after the quote pandemic had finished.
That's why remember, Julie, one more thing. Giving all the negative headlines that we have seen, especially the last 18 months, do you know overall there were no decreases in home prices in year-over-year?
I believe that.
In all the housing crash zones, all the doom and gloomers, all the sky is falling YouTubers out there preaching on a daily basis.
Right.
So clickbait and subscription, whatever,
Right.
a lot of subscribers. But those crash zones will continue to be wrong. Anyway, let's continue with this article. When mortgage rates and home prices are elevated, demand for affordability homes goes up.
Right.
I want to emphasize the word affordable homes.
Mhm.
The way I define affordable homes are entry-level homes that are
Right.
below the medium price in that particular market. So far, so good?
Yes, that makes sense.
Okay. I will give you more specifics in a few minutes. Home values are not holding up in expensive metros. Understandable, they're going to have a slight correction, nothing
Right.
out of the ordinary, at least for the short term. However, the influx of out-of-towners cause home values to skyrocket during the pandemic. And I've talked about it just many times with you during our videos, and also ever since I started my investment network, for that matter, in the past 20 years. Home values in urban areas aren't holding up as well as those in the suburbs, rural areas. So as doing, I concentrate on helping our investors
Right.
buy in the suburbs.
Absolutely.
Not in the urban areas and not in rural areas. Before I do a deep dive, why do I focus on suburban housing markets?
I think you would want to find an area where there's a high concentration of people and renters and business and hospitals, things where people go to work. Because if you're buying rental property, you want to have it in an area where it's accessible to people versus maybe out in the boondocks or whatever, which is nice and probably very green and everything, but there's not a whole lot of people out there, not a whole lot going on, renters.
That's right. 20, 30, 40, 50 miles away from the urban core. That is a suburban path of growth. By observing my network and how my investing philosophy goes. Okay, let's go to the total worth of U.S. real estate. You look at the total worth, the gray line, which is down here, where people buy in rural areas, and the light blue, or people buy in the urban areas, and the suburban is dark blue, which is right here. As you can see, the graph and the trends clearly indicate the suburban path of growth metros in all the U.S. So you have to follow the trends. You have to follow the research. You have to follow the migration, job growth, and population growth. And suburban market of the metro is the future of real estate purchase and real estate investing, something I've been practicing within my business.
No, it makes total sense.
The suburbs came back into vogue during the pandemic while cities fell out of favor, largely due to the shift to remote work, housing, affordability prices. And there are about 56 million residential properties in the suburbs compared to just 20 million each in rural and urban. So, when you investor buy an investment property, a cashman properties, they have to look into the future. Okay,
Correct.
And the future is suburban path of growth away from the major urban core. They dive deeper into some of these numbers, which is I find these numbers are misleading and inaccurate and misleading. Let me tell you why. Julie, you and I know each time I look at a headline, it doesn't matter from what source, Redfin or NAR or any of the mainstream medias, when, whenever there's a headlines out there, I'm always very skeptical.
Mm-hmm.
You have to read below, you have to read into the details. You have to,
Right.
you have to dive deeper beyond the headline, and you should be able to reveal all the discrepancies and inaccuracies that come from a particular news article. Agree? Now, let me give you one example. You can scroll down here. 5 more minutes and we should be done with this video. Anyway, all these metro areas shows the total values for homes, year-over-year change. Okay, anyway, I think we should conclude this, but let me show you something else. They're asking, what I mean by that? If an investor is going to buy in a suburban market, where should I buy and how should I buy? So, you can buy some properties in the Midwest as long as you partner yourself with a great turnkey provider. As in your case, you bought 6 rental properties in Buffalo, Niagara Falls, New York, in the past years.
Right.
And this is a typical property you bought. Again, I'm not going to go over the numbers that much.
Right.
So this duplex, a rehab property, turnkey, a duplex for $117,000, $1,800. You put 25% down payment, even with a 7% mortgage rate, 30 years fixed. The investor still going to cash your monthly net.
That's amazing. That extra $736 will change lives. That's huge. And you're getting all the benefits of owning property. The tenant is paying your mortgage and you're cash flowing. That's actually, we actually have a property up in the Lockport area.
Yep. I'm sure you guys are doing well.
Yes, very well.
Again, as long as you surround yourself with a good turnkey provider,
right,
provide in-house property management, so you can buy remotely, 3,000 miles away in your case, and have that team do everything for you.
Yes, absolutely. And they are great.
Well, absolutely. Yep, that's right. And the other market we have in Alabama, you can buy new construction, single family home, $210,000. The price has gone up.
Oh my goodness! Wow.
Yeah, it's no longer $210,000. So imagine buy a new built entry level cookie cutter home in the suburban market in Alabama, only around low $200K, and in rent was $1,550, and 25% down payment and a 6% mortgage rate. You're going to cash flow first year monthly at about $246.
That's good. That's really good.
And then if you buy in the great areas of Florida, new construction, single family home in the Central Florida, only for $264,000. You get a builder's gonna buy down low rates for you.
Nice. That's amazing. 4.75. Wow.
In the current environment, mortgage rate around 7.13 today. It's of 29 February, right? 2024. Mortgage News Daily, the interest rate for a good borrower for home occupied today is around 7.13%.
Wow.
As an investor, you're able to buy at 4.75% because you found a great builder within our network that we need to buy down the rate for you, so you can have a new interest rate to allow your property to cash flow, in this case, $300 monthly net cash flow.
Very good.
Just in a very fast growing market in Florida. Another brand new duplex also in Florida, less than $400,000. Basically, you can get the same builder's incentive, and you can net cash flow in excess of 500. Income is a multi-dimensional asset. A brand new fourplex in the fastest growing area in Texas.
Very nice.
In South Texas, and you can buy a 4-unit, very fast growing area for $510,000. And you rent for $5,300 on all 4 doors.
Wow.
25% down payment.
Wow.
And a 7% mortgage rate. You still cash flow monthly almost $1,000.
That's amazing. New construction.
Yeah, okay. I'm not going to go any further. You can invest in a person watching this video. They can also go over this tools
Mhm.
now, which is powerful. So let's conclude this. Okay, my takeaway from this revenue article is that you can be part of the people who can achieve your American dream. If you can afford it, buy your primary home. Don't worry about the current volatility. Don't worry about all the negative headlines. Focus on your goal, whether you're a primary home or a buyer, or whether you are mom and pop turnkey risk investor like you are, and many of my members.
Right.
Pull the trigger, take action, invest for the long term, invest for 10 to 15 years.
Absolutely. I couldn't have
And,
said it better. Absolutely.
and then you could be part of the winners and look at the equity growth. It's amazing equity growth over the past 23 years, according to this investment article.
Yes.
What do you need that it pays to own real estate? What's your final takeaway?
Oh my goodness. Like I said, I couldn't have said it better. I think again, the main thing, like you said, that you have to know what your goal is. You have to understand what you're trying to achieve through becoming a real estate investor and just really understand it is a business model. It is something long term. And in the really in the short and the long term, with all the different ways you take advantage of owning real estate, you'll come out on top. You'll be a winner, regardless of the interest rate and the gloom and doom.
Yeah. Anyway, sounds good, Julie. Thank you for your participation. You have some great insights. And for those of you out there, if you see any value from this video, please click the like button and subscribe to my YouTube channel and comment below where you're watching my videos from. And finally, also subscribe to my website, Flutter. You can learn more about this investing by putting your email into our website, and you can become a wealth builder and achieve your American dream as a risk investor. So regardless of where you live in the country, you can do this. You can do this remotely, passively, almost, but you own the property 100%. Your name.
Yes.
No syndication, no partnering. You buy 100% under your name. This is your property, your portfolio. So you have total control of your real estate portfolio over time, so you can achieve generational wealth for yourself and your family. Am I right?
Absolutely. I mean, that's absolutely the way to do it. Take advantage, get on your list, and really seriously consider making that phone call or sending that email and getting more information. Because you can't do anything without information.
Thank you so much, Julie.
Thank you.
Bye-bye, everyone. See you on the next video.
Bye-bye.